Hey traders, welcome to Charts and Coffee. Oh, good cup of coffee. All right, welcome to Charts and Coffee, gang. Happy Thursday. Got some interesting things on the calendar once again as we kick off the day. We had the FOMC meeting minutes yesterday, and then today we're dealing with the post PPI morning. We'll take a look at that PPI core CPI. And then we do have Bostic, FOMC member Bostic, speaking at 10 o'clock. Now, what that means is as we get out of the clearing range here this morning, boom, we're going to have a Fed member who has the ability, Atlanta Fed member who has the ability to move the market around. And then later on this afternoon, we've got Barkin at 1 p.m. So we're definitely getting pretty steady Fed speak throughout this week, just like we did last week. And then those of you that are in crude oil and looking for volatility, whether that be intraday or end of day, we have, because of the bank holiday on Monday, we have the crude oil inventories coming out at 11 o'clock. And then not to forget, we've been trading natural gas. This is a brand new re-entry for us, long natural gas via the UNG ETF, and that is also in play nicely. We have the 1030 natural gas inventories today. So am I looking for a re-entry based on that? Probably not, but I would love to see some follow through on that long position that we have once again re-entered. You know, look, buy the dip is not dead. We want to remember that it's just in a smaller group of names. But definitely keep an eye on that buy the dip, because there are plenty of markets that are still buy the dippable, right? Two of them I just mentioned, natural gas futures and the natural gas ETF. And you know, we've had a very nice position in URA. This is uranium. Yeah, as a futures trader, we don't have uranium futures, but this is where the ETFs and options on the ETFs are going to give us, you know, broader ability to access more trading ideas. This has been a fantastic trade, and we'll continue to manage that. So there are trends that are buy the dippable. So let's grab some questions here. As always, thank you for being here. Hey, the lazy lizard. Yeah, I am very well. I am. We just finished up our second webinar for the class coming up tomorrow. If you haven't checked it out, the replays will be sent out, but you can check it out at simplertrading.com/rotation-replay. That's pretty easy, right? Rotation-replay. So yeah, I'm well. I can't say the same thing for my voice, but it'll be fine for the class come Saturday. Thank you very much. Good morning. Hey there, Michael. Can I explain sell the rip? Sure. So we all know what buy the dip is, right? Buy the dip, the precursor to that is, are we in an uptrend? Then we're waiting for a retracement, right? All the retracement is, you know, it's a pullback. That's my Chewbacca voicemail. Oh, okay. I got a chiropractor appointment. All right. Good to know. All right. So then sell the rip becomes the precursor is a downtrend. And we're playing retracements. And retracements are bounces. So what that looks like is XLU, or an example from, you know, if you're looking for some of these downtrend sell the rip examples, Michael, if you didn't catch it yesterday, catch the replay of that webinar, because I talked about CHOP I talked about downtrends and what we do. So sell the rip is basically you've got to identify the downtrend, and then you look to short into the strength. That's it. So it's just the opposite of buy the dip. All right. Great to see everybody. Am I selling into the NAS? Are we selling into the NQ rip? One of the cool things that I was able to do yesterday in the webinar was, because we've seen the action that has so far happened this week, FOMC minutes, etc. This is not, hey there, James. This is not a sell the rip for us in the context of a trend. Now, is it? Maybe it's more along the lines of an overbought resistance zone, which I think is going to end up in that area where, this is kind of the trade that I set up on Friday, right? I'm just looking for that move right there. Now, if you ask me what sell the rip is, again, the precursor is going to be the downtrend. That would be XLC. So we've got to find the structure first. Structure first, strategy second, right? Structure first, strategy second. And that's exactly what we're just going to drill on Saturday, to the point where you're going to pull up a chart and you're going to know one of two things. Do I want to trade it or do I not? Which is a superpower, right? And then you're going to be able to really say, if I want to trade it, which one of the three baskets am I putting it in? Am I putting it in the sell the rip basket, buy the dip, or am I looking at range extremes that I'm going to fade? And so when you can start putting the symbols in their individual compartments, if you will, and then each one of those little individual compartments, okay, this is the indicator, this is the strategy. This is the indicator, this is the strategy. The market becomes much easier because now you've categorized what type of trade setup it is. So I know it might sound just like, verbiage. It might just sound like semantics. But the semantics matter because they will then dictate strategy, right? And that's where we can fall in love with a strategy, but if it's a poor mix for the current environment, the structure, we're in trouble. So structure, then strategy. All right. So thanks for the question, James. Can I share my thoughts on docs? Sure. Not a strength play, not a weakness play either. It's actually chop. So I would have to put docs kind of on a list of I'm super interested in maybe a resumption of the uptrend, but I can't see really great structure where I would say where the fade is. And so it would be a fade, right? If you're unfamiliar with fades, choppy market trading, check out the webinar replay, simpletrading.com/rotation-replay. And you'll see that the structure is okay. I'd say you're probably fading 70-10, call on, but I wouldn't put it high on my list of favorite chop. And yes, there are markets that could be considered favorite chop. So definitely could be a choppy play, but maybe not the best of chop because it's not settled yet, right? Can I check out BHP? Sure, Elliot. Now we start getting to things like downtrends, and we're looking at something like the BHP group. Remember this: why is this in a downtrend, and who is this hanging out with? What do I mean? Who is this hanging out with? This is that sector view, right? And I would say start looking at BHP. You're really looking at BATT. This is the lithium battery. I think it's lithium and battery sector. I would have to say I'm not really interested in BHP, mainly because BATT is moving higher. This is probably the only place that I would attach a narrative. If not, good old-fashioned 1, 2, 3 would be great. Yes, you could sell the rip, but if the group that this is hanging out with is generally trying to move higher, I'd rather trade it in that direction. So this is where I have a tug of war. I've got a really nice downtrend, quite frankly, south of the 200. Propulsion dots lit up, red grab candles, red JT multi. I mean, I can check every box. So yeah, you can short the rip, but the sector might say be careful. So I might actually be a little bit more interested in a 1, 2, 3 here than a short the rip. Okay. And again, it's that sector that decodes that for me. It's that sector that clarifies that setup, that preference for me. All right. Hey, Seamus, good morning. Good morning. Absolutely. Michael, let's see. Deborah, good morning, everybody. Let's see what we have next. Awesome webinar last night. Thank you. Thank you. Thoughts on Airbnb? So yeah, I mean, let's again, if everything is number one, structure, right? Number two, strategy, structure, structure. Even the support here is helping with structure. Strategy, number two, I want to be a buyer. So this is by the dippable. It is by the dippable. To the 200 maybe, sure. 55, sure. When the market weakens into support, that's an exhaustion play. And that is, I would say Airbnb long. Yeah, Airbnb long. Not from current levels, by the dip. All right. Hey there, Wilkin. Let's see. Thank you for the UNG calls. Oh, right. Almost 5x. Yeah, it's on it. And UNG's a really nice trade for us, no doubt. Hey, good trading. Look, I can put all the ideas out there I want, but you're the one hitting the keyboard, putting the trade in, setting up your position sizing. Fantastic, Wilkin. Yeah, this has been a nice 5x, depending on where you've been, it's even more from this level here, not to, I think we're at 10, I think at this point. But, the same idea is what URA is all about. Same idea. So love, love, love that, Wilkin. Fantastic. Jimmy, thank you. Thank you. Hey, I'm looking forward to seeing you all at the class on Saturday. This is the first time that I'm really going to dive into a lot of choppy market trading, how to recognize a downtrend. And then, between the 25th of October, depending on how long you go with live trading, out to the 19th of November, we're going to be together throughout that point, and you'll be getting my trades throughout that entire level, depending on which package you go with. So yeah, I'm really excited that, when I've got the ability to just sort of stay in contact with someone who's taken one of my classes for 2 to 4 weeks, I know that I can really just, take the lessons and just example after example, trade after trade, and just drive that home, right? So super excited about that. Can I go over propulsion dots and when they are effective? So see, propulsion dots will tell you when they're effective, because if they're not lit up, there's nothing to respond to. So their effectiveness and their validity is really dependent upon them, because they usually shut off in chop, and they'll usually light up as a trend starts to organize. So, I mean, like any moving average based tool, they are going to be more effective in a trend. And by the way, the propulsion dots, which you see, all over my screens, no doubt, are a very important part of what I do. This tool is something that will be integral to the type of trading that I'll be doing in the next few, conceivably weeks to months, especially in those situations where we still have uptrends and where we might be turning into downtrends. All right. So they self-correct, right? And they're best in trends. How to best manage the remaining 1/4 of the URA trade. So so this is trade management, right? Risk management gets to transition. That's the best part of a trade. Risk management gets to transition to trade management once we get past the first target, which we are well past, now into the second. After the second target, I move to a trailing stop. So I'll be looking at a trailing stop for us in this URA trade, because again, we're already long from way down there. I don't know that we keep shooting up higher like this. I hope we do, right? But what I'll do is, when I say trailing stop, think safety net. And what I'm going to do is put a safety net in on this trade. All right. So that's how we're managing the remainder of this URA, having hit 2 targets. I'm not getting long here. This trade's happened, right? Everyone's noticing a lot of, broadly the markets are noticing this now, which is great, because what I'm hoping, all right, this is what I'm hoping for. I would love momentum traders now to say, look, our criteria is met and we want to get long now. I would love that. That would be fantastic. That would give us our third leg. for this trade. And you're going to find when you're an exhaustion trader, as I'd say 80+% of my trading is, you're buying off support as opposed to shorting through it. You're shorting at resistance as opposed to buying through it. And what you're going to find is some of the best gifts that an exhaustion trader gets from the market is when we get that pullback, we get that pause, we buy our option. It moves higher because continuation is the more likely scenario over the course of your career, over the course of time. Continuation will eclipse capitulation. The market's more likely to continue than it is to roll over and die. So that's the number one gift. We get that pullback. And a pause, even better. But the next gift is when the market does follow through and the momentum traders show up. Love the momentum traders. They've got a valid strategy on their own, but it also, imagine refueling the tank on a trade you've already taken. That's what the Momo does. Love Momo traders, because I'd love them to show up now. That's for sure. All right, next up is, do I have a class where I teach technical analysis? So, Sarana, I would say every class that I teach is rooted in understanding price, the indicators that are based on price, volume, volatility, time. So every class, there's no way I can teach a class without the value of crunching that data. And if crunching the data is most broadly considered what technical analysis is, then every single class. I don't teach classic technical analysis. What do I mean by that? Look, if you want to read a book and learn classic technical analysis, I'll tell you to read the book that I read early on in my career. It's still the best by a landslide when it comes to technical analysis. I'll even go so far to say that everyone since has basically rewritten that book when they're writing a book about technical analysis, and that is Richard Schaubacher's Technical Analysis and Stock Market Profits. It's still the original. It's still the best. But it doesn't mean that it's indicator heavy. For me, technical analysis is a lot of price study, not just secret squiggles. So every class, my friend, but you can pick up any number of books and learn about just the basics of it. Heck, you can Google it. But then here's what I'll tell you. The real world application of that doesn't play out necessarily like the books always say. And that's where, you learn from a trader who's an exhaustion trader or a momentum trader or whatever it is. And you learn how they apply that number crunching to the modern markets, quite frankly. But Schaubacher is my favorite recommendation. That's where you start if you're interested in that kind of analysis. And I think technical analysis is sadly morphed into secret squiggles. Secret squiggles are what I call, any indicator on a chart that isn't a pure read of price. I have my own secret squiggles, but I think sometimes we put a little too much emphasis on them and not enough on volume, time, volatility. So you want to really master those 4 factors. Any thoughts on CL? Oh gosh, yeah. When I see CL, my eyes turn into little hearts. I get little heart eyes, Jamie, when I look at CL. I want to buy a dip, no doubt. And then as CL rises, we're seeing how it is taking oil stocks with it. Yahtzee. That's what I want to see. So any thoughts on CL? Want to buy it. Thoughts on oil stocks? Want to buy those too on a dip. Okay. Jay asked, do I think I'll do another day trading class next year? Oh gosh, I'll tell you, and kudos to Trish, because we're right now, if it feels like, gosh, Rog, you've been brain dumping for the better part of about the last 75 days. I have. In the last 75 days, we've had a day trading class. We've had an indicator class, and now I'm having this sector class. But what's really unique is in these 75 days, you've pretty much got a brain dump of my entire day. What do I do in the morning and what I do in the afternoon? And you've really now got a total view of, well, me as a trader and my tools, which is kind of cool because in a very short period of time, it's been an immersion. But, to think about the next class, Jay, oh gosh, Probably. I don't know when. Probably. But the one that I just did, you can still pick up, catch the replay of the class, the live trading, and then join me in the mastery or in the futures room where I day trade, a handful of times per week. So you can see me do it in the live market. So yeah, right now I just can't even get past the sector. I'm super looking forward to it. All right. Let me go ahead and get going with our morning. And I'm looking forward to seeing you all in the class on Saturday. And I'll see you all same time, same station. It's 9:20. Head on over to your respective rooms. Be good to each other. I'll talk with you soon.